Hello, this is Sherry Dyer, Mortgage Advisor at MDI Mortgage. Today's Get Inside Solving the Mortgage Mystery will focus on upcoming changes with risk-based pricing. First, what is risk-based pricing? A few years ago, Fannie Mae and Freddie Mac determined that certain loan characteristics carried more risk, and the borrower or loan terms that were in a higher risk category would pay higher costs. This was generally a fair way to allocate costs. Well, recently they added a quarter-point adverse market fee. I like to call this the government-sponsored agencies are losing too much money and are simply trying to cover some of their losses fee. This pricing hit affected everyone who was granted a conforming loan over the past 2 years. It may have been in closing costs or in rate, but it was there and across the board. Well, as of April 1st, mortgage loans are about to become more expensive. The risk-based pricing matrix is expanding again, and what was once considered good might now be considered high risk. For example, a borrower could have an 800 credit score and have 20% to put down, and this suddenly is more risky. Well, it once had no pricing adjustment because it really isn't high risk, and now it's going to be charged a quarter point of the loan amount. So on a loan amount of $300,000, added closing costs of $750 for this borrower. Or to avoid that closing cost, maybe a rate increase that's an eighth higher, but that then adds to the overall finance charges over the life of the loan. It's interesting that a credit score of 680 was once considered excellent. Now you can see it carries added closing costs of 1.75% or over $5,000 on that same $300,000 loan size, or a rate that might be a quarter or 3/8 higher to avoid the $5,000 closing costs increase. Most of the pricing adjustments coming for April are an extra 0.25% in cost across the board. So what does this mean? If a lender doesn't sell the servicing to a mortgage, does that mean these fees won't apply? Well, unfortunately, most banks, whether small community banks or larger regional banks, underwrite to Fannie Mae and Freddie Mac standards. And they may sell these loans even though they're keeping the servicing. It's something that happens behind the scenes and the borrower may not even be aware of it. It's probably a good topic to cover in another Get Inside video, but basically, unless the loan is specifically a portfolio loan, also known as an in-house mortgage, and the rates on those type of loans are typically higher anyway, these pricing adjustments will apply. Well, are there any ways to avoid paying these risk-based premiums? Yes, a 15-year mortgage or shorter term is exempt. Having a higher credit score and a down payment of 25% could be exempt from this new round of what is a higher risk loan. A Fannie Mae Refi Plus and a Freddie Mac Relief refinance are not being assessed these extra fees. Now, not all the banks are offering these programs, but some are. MDI Mortgage has access to these special low-cost refi programs, and we've successfully negotiated some very favorable loan terms for our clients over the past few years. There may be other options available for your unique situation as well. When you call us for advice regarding mortgage financing, we investigate the many different loan options and choices, present all the information needed in an easy to understand format so you can be sure you're making the very best decision for you. For more details about this change, you're invited to contact me. I'm happy to help. Sherry Dyer, Advisor and Mortgage Maven.